there's a lot of great deals out there right now. There's a lot of things trading at an incredible discount, and arguably is even undervalued for the long-term potential that it has. So as long as you're thinking about the long term, and as long as you are investing in things that really have a lot of fundamental growth and fundamental technological value in them, I think you're going to do pretty well.
Welcome back, everybody. Again, I got our awesome guest, Justin Greene, here. He's going to give us a quick rundown, a little bit about his background again, just to kind of keep you informed of what he's been doing over the last 5 years and how he got to this point to kind of bring us his great opinions. So, Justin, thank you for coming back on.
Thank you, Joe. So I am a trader and developer in the cryptocurrency space. I've been doing this basically since, the pre-Ethereum days. I participated in Ethereum ICO, done a number of developer gigs in the space, done some data analytics work, and I'm continuing to look for opportunities and look for ways to innovate, and particularly work with some of the DAOs in the space. It's kind of my forte, and continue to trade and invest in the space and where I see opportunities. And really, my forte is to do a deep technical analysis on project fundamentals and to find technology that really excites me and that I think has explosive growth technology, particularly in the decentralized finance space, and just put my money where my mouth is. Although, full caveat, we're probably in for some hard times over the next year or two or three. So I'm probably not going to be doing a lot of trading, and we'll be doing more development. So hey, if you're hiring, hit me up.
That's awesome. And look, in investing in crypto, hindsight is 2020, right? You're early to Ethereum. So maybe just for those listening and investing, obviously there's always a big decision on whether we should just buy and hold with those diamond hands or we should sell some portion along the way. I mean, looking back, maybe you sold too much too early when it came to Ethereum. What's your thoughts now and how you move forward in different projects?
Yeah, being a trader for as long as I've been, I both sold too little and sold too much. I mean, the market cycles in crypto are just absolutely brutal, and no one knows what's going to happen at any point in time. You get these guys that look at technical analysis, lines on charts, things like that. That stuff really doesn't tell you what's going to happen in the long term. And there's so much uncertainty in the space that it's really hard to time the markets. The best thing you can do is to find projects that you really believe have fundamental value and fundamental growth going on, that have great teams behind them and that are making good technological progress, and put your money there and hold it for 2, 3, 5, even 10 years, right? You want to think long term, because that's really where small investors can still have an edge. And that's really going to eliminate you having to worry about these market cycles, because on that time span, the fundamental growth of this technology really outpaces anything that you're going to see from these market cycles, even if you buy at the highs, because we get what, minus 80, minus 90% from the highs in these market cycles. And yeah, if you buy at the top, it really sucks to sit there and watch your money burn to the ground. But historically, even if you buy quality projects at the highs on a 3+ year time span, you've still made out all right. And so that's really how investors should be thinking about their investments through what we're going through now, which looks like we're going to be going further into a bear market, further into a recession. It's not going to be a good time for risky investments like crypto. But on the long term, there's a lot of great deals out there right now. There's a lot of things trading at an incredible discount, and arguably is even undervalued for the long-term potential that it has. So as long as you're thinking about the long term, and as long as you are investing in things that really have a lot of fundamental growth and fundamental technological value in them, I think you're going to do pretty well.
I agree. Definitely dollar cost average, right? Dollar cost average. Always keep saying the same damn thing.
Absolutely. Yeah. You never buy all at once. You got to spread your investments out over a long period of time, 6 to 12 months, something like that.
When it comes to Ethereum network, recently, I believe Vitalik put out something about some type of Soulbound tokens, right?
Yes.
Can you kind of give us, a high level what's happening there, what that means?
Yeah. So Vitalik co-authored a paper with 2 other researchers, Glenn Weil and Pujil Haver, I think is how you pronounce it. Basically, the idea of a Soulbound token is an NFT that is tied to your account, your Ethereum address, that you can't transfer, or it's only transferable, if you like lose your private key and you have to recover, something like that. The idea is that this allows people to accumulate an identity on chain. So imagine if you are a DAO contributor, maybe you're working for a DAO or you're voting, doing something like that. You might get a Soulbound token that says, hey, I participated, right? Some sort of participation trophy. And over time, your address will accumulate these Soulbound tokens, and that will form part of your on-chain identity. And this will be a backbone of future identity systems, where if you look at like how, for example, the Optimism or the Arbitrum airdrop went recently, they're sending those airdrop tokens to people that have some sort of on-chain identity, like they've participated in Gitcoin donations or they've bridged tokens over. And you kind of if you check the number of those boxes, you can get more tokens in the airdrop. So this is sort of like a proto on-chain identity. And Soulbound tokens are really taking it to the next level by formalizing this concept and allowing you to accumulate some sort of on-chain creds that will be useful in future crypto society type things. And we can take this all the way to attestations by different institutions where like you might have your bank give you a Soulbound token that's an attestation of your identity and your employer and things like that. So really we're just tying a lot of these attestations to your account. And because it's non-transferable, the idea is that you're not supposed to be able to sell it or send these things around. It doesn't really make sense to do that because it's part of your identity, part of your history. Now, there have been a number of concerns raised about privacy or what happens if you lose your password, things like that. And yeah, there are details to be worked out there. The authors of the paper have been vigorously defending themselves on Twitter because, Twitter these days, it's really spicy. I guess everyone's upset with the bear market going on. Everyone's got to stick up their ass. So, people have been ripping this paper to shreds, but there's been a lot of good discussion on Twitter. If you go follow the authors and see what they're saying, I think that most of the criticisms can be addressed and that the idea will eventually be proven out to be very powerful and very useful in the crypto space and potentially a fundamental aspect of building digital societies, that kind of exist on the blockchain. And potentially we'll see like zero knowledge proof technology involved where, you might have a Soulbound token on your account, but you don't have to show it to anyone. You can just present a zero knowledge proof that says, you meet some minimum requirements of having a certain amount of Soulbound attestations. And so that, would be one way to address privacy. But I encourage everyone to go read the paper and go follow the authors on Twitter, because this is where a lot of the next generation of crypto stuff is being talked about. If you want to figure out what's next, I think it's going to be some of these like decentralized societies type stuff going on that is really going to take crypto to the next level.
So I feel like over the last maybe year or so, the whole world said everything was going to be an NFT, right? Including your, like you said, graduation certificate, whatever it would be. And now we kind of have this new word, Soulbound tokens. Is this just another new buzzword, or kind of how do you think these things differentiate from each other?
Yeah, I think it's clarifying a way a lot of this NFT stuff should work. Because if you think about like a graduation certificate, right? If let's say you go to college and you graduate and they're going to send you an NFT that's your college diploma, that doesn't really make a whole lot of sense to transfer that, right? Like, what are you going to sell your college NFT on OpenSea? That doesn't really make sense, because if someone buys that, it's not like they went to college. So this is not like an asset that is meant to have transferable ownership. This is more of an attestation. And we want to record this attestation on the blockchain for its immutable history and its integration with programmable money and finance and everything like that. I think the term Soulbound tokens, I'm not sure if the authors invented this or if it was from some DAO community that might have come up with this, but certainly they've popularized it. The idea is that these tokens are bound to your identity. It is part of who you are. It's part of your history. You're not supposed to transfer them. They're not fungible. So it's really just some kind of attestation. Of course, again, there's a question, what happens if you lose your password and things like that? There needs to be some sort of recovery mechanism where maybe you can burn it and then it gets reissued to your new account if you go back to your college and you say, hey, can you reissue the certificate? There's things like that corner cases. But by and large, these tokens are part of your identity. And so I think this was always a thing people were thinking of, but it's now been formalized and put into a nice paper that we can all read and understand the implications of. So hopefully we're going to see some of this functionality coming out in the future. And I think DAOs are probably going to be the first ones to really take advantage of this and start issuing soulbound tokens that, represent your DAO participation.
That's interesting. So have they laid out kind of what the next steps are, or are they just taking feedback and then gonna implement based on feedback and iterate from there?
Yeah, they're definitely in the feedback stage. Just from all the blowback on Twitter, they're probably going to go back to the drawing board, maybe even revise the paper, because there's just been so much feedback on Twitter, both good and bad. And I don't really understand the bad feedback. I mean, there's been people that have been very rude to the authors on Twitter and really just almost viewed it like a dystopian nightmare to have these soulbound tokens. It's like, oh, you can never have anonymity again if you have these soulbound tokens, or just ripping this idea to shreds. Again, I think all these criticisms are valid but addressable. And I think the authors do have good responses, and there are good ways that they can revise the proposal and the ideas to address a lot of this. And I think within the next year or two, we'll probably see some actual projects implementing this.
I guess from a wallet security standpoint, right? Like you said, and kind of proof of identity to piggyback off this, people are questioning, what are some ways you kind of see that play out, or maybe some ways people can actually be looking out for investment wise, right? Like if you have all your assets in a wallet, then obviously it's exposed to the whole world, right? Will there be services that can overlay that where you can display certain things, or, how do you kind of see this play out, like you mentioned?
The biggest piece of technology I think that's going to enhance the privacy there is, like I said, it's the zero knowledge proofs. So we need a way to store these attestations in like a zero knowledge ledger, like maybe the Mina protocol or any sort of zero knowledge virtual machine that allows you to generate these proofs that you have these attestations, you have these soulbound tokens, but you don't actually have to reveal your account and all of the tokens that are in there to the world. And so all of that state is encrypted inside the virtual machine. And then you can just generate these proofs that show that you meet some requirements. Like if you need to go sign up for the service and it's like, you need to have a college degree. Okay, great. Here's my zero knowledge proof that I have one, but you don't know what college I went to unless I want to reveal that as well. So that's the way that we're going to address privacy. Now, that technology is still a ways away from being practical, because zero knowledge proofs, not only do you need a beefy GPU basically to compute them, but all of the software and everything like that runs it is just all so new and in its infancy. So probably we're not going to see like personal identity information on chain for a while before that privacy issue is worked out. We're going to see more like pseudonyms, having these soulbound tokens where it's like, whatever your .eth is, some fun name .eth, that's your online identity. It's not necessarily tied to your personal account unless you dox yourself, and you'll accumulate things on there like, I voted in this, or I donated to Gitcoin and I got this participation soulbound token. And so you sort of build your online persona through these different participation means. And as long as you understand that everything in there is going to be public and tied to your online persona, then it's okay. But as soon as we start venturing into the world of who you are personally offline, that's where we're going to need strong privacy guarantees so that you don't just get data mined and dump your whole life onto the blockchain.
How can we use Web 2.0 or just existing identity services and marry them with what they're trying to accomplish to bridge that gap until other things are available and ready?
Yeah. So Web 2.0 identity services, I mean, even existing Web 2 social media accounts, right, have some level of identity. Your Facebook account, your Instagram account, Twitter account, etc. And we already see a lot of services let you log in with those Web 2 social media accounts. So in a way, you're right that our identity is heavily tied to these Web 2 services. What they can do is they can themselves issue soulbound tokens. They don't have to issue the token saying who you are. They can just say, we attest that this account, that this Ethereum address is a user on Facebook and things like that. So they can actually integrate with this idea, with this technology, and allow your on-chain identity to have more validity there will be services that say, hey, you need to get Facebook and Instagram and Twitter to all issue you a Soulbound token, and then we'll let you sign up. So we make sure you're not just like a bot or something. And so that is going to be a crucial piece of tying identities together on chain. And furthermore, the decentralized social networks will be a part of that as well, because that is already on chain. And then, again, your bank, your educational institutions, your employer, they can all tie into this as well to attest that you are a person. And so I think that the more institutions that integrate with this, the better the on-chain identity problem gets, because that is a huge problem. And, the way that we see these airdrops get farmed by bots and things like that. So I think that going forward, that they are going to want to integrate eventually.
I was at a meetup last night talking to some guys, like, what I just sense is like, we're like really right now, next few years going after like Web 2.5, right? Where we're marrying Web 2 services still to help with Web 3 services, but ultimately it's going to take like, whatever, a decade or 10 years to kind of play out more in a decentralized fashion. Do you kind of agree there? And should people maybe embrace that conversation more as a way to first build products now that are available and also bring users in? I mean, I think from like a cold start, you're not just going to bring like billions of people from Facebook over, right? Like you want to build something that kind of integrates with Facebook, but has the Web3 components and users start using, but then they're not giving up that yet. But ultimately, a decade out, 15 years out, they go to these new decentralized products.
Yeah, I think absolutely that is one way to go. I mean, I don't want to say that, we shouldn't go Web3 native.
I understand that.
We need to explore all paths in parallel, right? And then certainly we have that. And actually, I think we're seeing more pure Web3 native projects in at least the social media space than we are seeing the Web2 companies get into it. I mean, Twitter, how long did it take them to show NFTs, right, on your profile pic? Now you can have a little hexagon as your profile image is a hexagon shape instead of a circle if you have an on-chain NFT. But I mean, come on, is that really that big of a deal? I think it would be much more interesting if Twitter or Facebook or Instagram allowed you to have a crypto wallet in the app, and then in your chat with people, you could directly send them coins, or you could directly get donations and things like that on Twitter. I think that integrating with the financial side would be much more interesting. Of course, there's regulations involved that are going to get in the way there, but I think eventually that'll be worked out. And I think things like that are going to be how these Web2 companies bridge the gap. I mean, they are going to want to stay relevant. I'm sure all the board of shareholders are all sweating every time they see one of these, Web3 social media companies do something. So in order to stay relevant and in order to give users what they want, they're going to have to integrate with crypto and a lot of this technology. But I don't think that in the long run, they will be able to compete with what the fully decentralized social media platforms give you, which is true ownership of your own content and users having governance over the platform. The users of Facebook are never going to have more of a say than the shareholders of Facebook. And that's just, there's no way to get around that. They're not just going to give up governance. They're not just going to give up content rights. So that's really where Web3 social media, just having that fresh start, is going to, in the long run, I think, outcompete Web2.
Does that kind of lead us into DAOs, really, where, everyone who wants to have a participation in the say of what's occurring or happening, that they join a DAO for a certain organization?
Yeah, I mean, so far, most DAOs have been, very, very equity-like in their governance, where, you buy the tokens, and then however many tokens you have, that's proportional to your voting power. So in one sense, it's not that much better than the stock market, because if you're a rich person, you can come in, you can buy, like Elon Musk wanting to buy Twitter, right? He can just come in and buy it and have his influence over it. Similarly, he could come in and he could buy up a bunch of Aave tokens and get all his proposals passed through the Aave DAO. So in that sense, it's still plutocratic, but at the very least, crypto tokens have more accessibility because anyone in the world can buy them for very cheaply. You don't have to have a account at a US banking institution, that is an official stock market trading partner, or you don't have to be an accredited investor, to get a lot of this stuff, which just means you're already rich. It is truly globally accessible. So in that respect, it is better, but it's still plutocratic in that you have to have money to actually pass votes and pass proposals. However, we are seeing a lot of innovation on that front where DAOs are working on new forms of governance that is less plutocratic. Like we're seeing some DAOs work on quadratic voting, where your voting power is the square root of your number of tokens as opposed to the raw number. So the difference between a rich person and a poor person is less. It's still more, but it's a little bit more even out than just having the direct amount of tokens be your votes. And then we're also seeing people work on like councils where, community members that have been really active and they've been well liked in the community, they get voted into a council that has governance rights over the DAO. And so they don't have to have any tokens to do that. They can just be a member of the community and run for this council. So we are seeing innovations there. And I think we're going to continue to see innovations because governance is such a huge deal in crypto. And it's the only place in the world where you can really experiment with governance, So I think that we're going to continue to see a lot of cool stuff coming out there.
Without spending too much time for all the listeners, right? DAOs are definitely another buzzword like NFTs the last year, right? I mean,
yep.
What do you see really coming out of this and what's going to crash and burn maybe?
Yeah. So, this bear market is going to reveal a lot of things about DAOs, who really has their shit together and who really has a strong community and a strong treasury management, especially to last. So as the bear market continues, in order to fund themselves and fund developer costs and infrastructure costs, et cetera, these DAOs may have to sell their own token in order to fund that. And, if you're selling your own token in a bear market, it's just going to further cause problems and they might become insolvent and have to dissolve or, restructure themselves in some way. So the DAOs that are not resilient to that sort of environment, they're potentially going to fail. They're potentially just going to go to zero and people are just going to leave. The thing about DAOs is in order for them to work, because there's not a very strong there's not like an org chart in DAOs, right? People aren't taking orders from high command in the DAOs. It's sort of this loose group of people at this point that just kind of show up. Most of them are probably token holders or have some sort of interest in the project. And they're there because it's exciting and there's a lot of innovation going on. There's fun things to work on. It's a fun Discord chat to be in. It's really built on a lot of people's excitement right now. And during a bear market, when the going gets tough and people really have to start thinking about how they're making money, we're just going to see a lot less of this sort of volunteer army of people behind these DAOs, and the communities are going to shore up. And the only ones that are going to still have a community behind them that are doing work and that are progressing this DAO, that are voting, that are writing proposals, are the ones that really have not only a strong product behind them, but a strong core team of contributors that can kind of keep the momentum going. And so that probably, in order to have a core team, you have to have a treasury, you have to pay people, right? So it sort of all just goes back to these DAOs being well organized, both financially and from a core team perspective. So what we're going to see in the future probably is more organized DAOs that essentially look a lot more like a company in terms of an org chart, in terms of salaries and et cetera. If you want to see the direction that DAOs are going, just go look at the MakerDAO forums, where Greene, the co-founder of MakerDAO, he recently wrote a proposal that is essentially restructuring that organization to basically survive the bear market and to release new products and to innovate more and to organize the token holders and the governance participants in a better way. So it really comes down to just getting more organized. During the bull market, you don't have to do anything because people are just funneling in and just joining the DAO, doing work, buying the token. It's all good. But in the bear market, you have to have a treasury. You have to be organized. You have to have a core team. You have to have an MO. You have to be constantly innovating and releasing products, just like a startup. So we're really going to see the DAOs that have their shit together and the ones that don't during this bear market.
So we are in a bear market.
Yeah, I don't think there's any question in that respect at this point.
Regarding, obviously, people may or may not like him, but definitely people always view his opinions, and that's Arthur Hayes, right? He came out with another lengthy article this week, maybe saying that ultimately looking at charts, analytics, different things over the historical track record, 25, 27K is bottom-ish for Bitcoin, and very well could be now, it could be by the end of this year. But what's happening in the economy, that this may not be as deep as a bear market we maybe have seen in the past. And kind of as we put on our glasses to try to forecast what is going to happen, what are some directions you think this could go and maybe why?
Yeah, I mean, I certainly think that it's in the realm of possibility to see another minus 50% from here by the end of the year. Although if we did have that, I would be much more inclined to say that is the bottom rather than another minus 10 or 20% of what Arthur Hayes is projecting. At this point, trying to call the bottom is a fool's errand. There's too many factors at play. I mean, because it's macroeconomics at this point, and it's just the global economic system. Nobody can really predict that with much accuracy beyond a couple quarters. It's just so many things could happen. Another war could break out. Disruptive technology could break out. Political changes could happen. It's just, as a crypto investor, you can't really also make yourself a macroeconomics expert. There's no one has time to do both. So I think that listening to these bottom calls or whatever, it's all right to do. But I think that the more important thing is that you're just averaging in while the market is down. You raised cash during the bull market, and now is the time that you do your dollar cost averaging. And you're probably not going to buy at the exact bottom. Almost nobody is. But at least you know that prices are depressed now and that people are being forced to sell. And when those people that are forced to sell or people that are capitulating, that's historically a good time to buy. So that's really what I'm more concerned about, is just thinking about, are market prices depressed for some reason, looking at the long-term trends and looking at the exponential growth of this technology. And I think the answer is unequivocally yes right now. Now, again, you might have to suffer another 50% down on your tokens that you just bought or that you've been holding for a while. But that volatility is just part of investing in early stage disruptive technology. And, just knowing that you size your bets appropriately, you manage your portfolio and your risk appropriately. And then if you want to try to call the bottoms, be my guest. But I think there's going to be just a lot of bad calls there and a lot of people that overtrade themselves when they could have just bought some stuff or dollar cost averaged and just held for a couple of years.
Yeah. And there's definitely always signs to those that are experienced or have a lot of wealth in the market, right? I mean, last fall we had Jeff Bezos and Elon Musk selling stock at the top, right? I mean, you had a lot of CEOs doing that. And recently, a lot of these CEOs or internal staff, whatever, or executives are now buying stock back, right? And Warren Buffett also deployed 50-ish billion in first quarter. Maybe it's not quite the bottom or not, but he's at least seeing value there. So those that are listening, they're looking at all this happening, obviously, from a valuation standpoint, how they maybe look at value of this stuff and determine, hey, maybe this is a good entry point too.
Yeah, absolutely. If the tech CEOs are buying, that's obviously a good sign that they also think that on the long term, these are good prices to buy in at. And they certainly have more sophisticated portfolio management than your average retail investor who probably went all in last summer and is now really, really struggling. So, that's definitely a good sign that this is a good time to buy. And again, there could be more downside, there could be pain. You're going to be, waking up in bed and looking at CoinGecko and then going back to sleep because you don't want to face reality. But as long as you think long-term, this is not going to be that big of a deal.
Yeah. I mean, I think it's interesting to see how quickly things are slowing down and how quickly layoffs are occurring. I mean, I think Gemini just put out that they're laying off 10% of their staff too. Mm-hmm. And Coinbase, I believe, put hiring on a freeze also. So everyone definitely has put the brakes on. And I guess that could kind of attribute to the lack of trading volume and everything else, which obviously hurts their P&L.
Right.
How do you think all these layoffs can actually benefit, a lot of the startups in the ecosystem that might still have a great balance sheet?
Yeah, well, it's been super hard to hire crypto people for pretty much the entire bull market, right? Especially developers and people with any sort of crypto experience. It's been to the point where a lot of these companies have been poaching Web2 people because they just can't find anyone that really knows their shit in crypto anymore. They're already working for crypto startups. So I think this is going to be a great time for startups that have a decent treasury, that are still hiring, that are still growing, to hire good people and onboard them into crypto and continue to build out their products. And again, that's going to be something to look for in a lot of these DAOs. Who's still hiring? Who's still bringing people in? That's a great sign that this DAO or this company has their shit together and that they're going to continue to innovate and grow throughout the bear market. They say the bear market is for building. And so that's what you want to see. That's what you're looking for. And for people that were laid off from these companies, or people that, like recently Tesla said, no more remote work, and presumably a lot of people are handing in the resignation. Hey, look, crypto is all remote. So, come over. The grass is a lot greener over here. And, there's a lot of really exciting companies that would hire you in a minute. And so I think that this is going to be a great opportunity for a lot of these companies.
So as we're leaving off here, triple B, right? Bears, build, and buy, right?
Yes, that's a great way to think about it. I like that.
I mean, that's the way we can leave off. For everyone who joined us today, also like to follow Justin. Justin, what's the best way for them?
Yeah, just find me on Twitter. It's at JGrizzled1, JGRIZZLED1. I post my spicy takes on there. I post, my thoughts about the market on there. So give me a follow.
Thank you, everyone, for joining us today. Like and subscribe. See you next time.
Thanks, everybody.
Hey, everyone. Thanks for watching my latest interview. If you like what you saw, please click the subscribe button below to become a member of the Joe Robert community. Be sure to hit the bell to turn on all notifications so you always know when I post a new video. Tell me what you thought about the content in the comments below. I always read them and would love to answer any of your questions.